Today's highlights. Bitcoin reserves are plummeting while ETFs are buying aggressively. So the question is, how much selling pressure is left? The Fed isn't cutting rates, and Musk is flirting with the SEC. War in the Middle East has pushed oil prices past 100. Polymarket has launched an offline situation analyst with the resonance of 3 market trends. Is a super rally on the way? Thursday, March 19th. This is the BTV Chinese channel. Where is the coin chain? I'm Michael. Let's look at the essential 24-hour crypto data. Looking at the current market, it's quite clear. From the chart, exchange reserves have dropped to 2,770,000 bitcoins, continuing to decline. However, ETF holdings are around 1,320,000, maintaining an overall upward trend. With outflows on one side and accumulation on the other, the net result is that sellable supply in the market is becoming increasingly scarce. Institutions are gradually locking up and absorbing Bitcoin through ETFs. As you can see, right after the policy meeting, Bitcoin saw a pullback from around 74,000. The trend looks a bit weak. But the good news is that on-chain structure shows no significant selling pressure, suggesting this pullback is just driven by sentiment. The on-chain structure is becoming more stable now. This combination often means the market is actually shifting gears, moving from a phase driven by liquidity to one supported by supply, demand, and fundamentals. In the short term, macro news will still drive sentiment and volatility, but in the medium term, Bitcoin's foundation is steadily strengthening. All right, looking at more on-chain data, the net pressure indicator has dropped to around 1.5 over the last 24 hours. This means most of those who wanted to sell have already done so. The dumpers are running out of ammunition. However, the price is still hovering below the short-term holder cost basis, indicating overhead resistance from trapped positions. Meanwhile, the macro environment is shifting. The key risk index has now dropped below 0, entering a high-risk zone. It's currently around 48 as capital begins to rotate from safe havens into riskier assets. If these two signals appear together, it indicates that market sentiment is actually recovering and selling pressure is easing. But don't expect the market to take off immediately. Usually there's a period of consolidation and friction. Until when? Only when everyone loses hope will the market trend gradually start to emerge. Now let's look at another interesting data point. The whale ratio on Binance has risen to 0.4. What does this mean? Large holders are starting to transfer coins to Binance, showing a clear uptick compared to previous lows. This kind of move isn't for long-term storage, right? They're likely looking for an opportunity to sell. At the same time, you can see the price is making a weak rebound around 73,000. It looks like it wants to go up, but let me tell you, this rally actually has very little momentum. At this point, the whale's actions, transferring into exchanges, is like someone setting up sell orders in advance. Any slight rise meets selling pressure. Simply put, big money is just waiting for a rebound to sell off. Historically, this data combination basically means it can't go up and is prone to being dumped. Without new capital coming in to take over, this structure will likely lead to a downward trend. Alright, data analysis is definitely pretty dry, but you really must understand the sentiment and the fundamentals that are driving it. In this way, your trading decisions will have a much more solid basis. Now, let's go over the news. We want to take a more macro perspective to see what the so-called illegal finance has become today. So please give us a like and hit the bell icon. It's a huge support for our show. Since Trump fired that shot at Iran, global capital markets, especially risky assets, have been undergoing a repricing, or rather a risk pricing. On one hand, the Fed said no rate cuts in March. Why? Because inflation has picked up. On the other hand, Musk is in settlement talks with the SEC, essentially playing nice with them. These might seem like two completely different stories, but they are two sides of the same logic. Why is that? I'll tell you in a moment.
In March, the Fed kept interest rates unchanged in the 3.5 to 3.75% range, remaining steady. Meanwhile, inflation remains above the target, staying roughly between 2.7 and 2.8%. Core inflation exceeded 3% as rising energy prices and geopolitical conflicts increased uncertainty. Gas prices rose to approximately $3.84 per gallon. The Fed still expects only one rate cut in 2026, but the policy path remains highly data-dependent.
Today, the FOMC decided to leave our policy rate unchanged. We see the current stance of monetary policy as appropriate to promote progress toward our maximum employment and 2% inflation goals. The implications of developments in the Middle East for the U.S. economy are uncertain.
Musk is in settlement talks with the SEC over the delayed disclosure of his Twitter stake in 2022. The case involves his failure to disclose a stake of over 5% within 10 days, delaying it to 21 days. The SEC alleges this allowed him to keep buying shares at lower prices, saving about $150 million. Both parties have applied to extend the litigation until April to work toward a potential resolution. This case is seen as a major hurdle for SpaceX's future IPO. Banks want to clear regulatory risks before listing.
If we put these two things together, you'll see that since the Fed isn't cutting rates, corporate financing is now costlier and harder. Can they survive until the day the liquidity gates open and rates are finally cut? The regulator's attitude is crucial now. That's why he has to play nice with the SEC, right? Of course, Musk has his reasons. X money is coming. How can you pull off such a massive financial shift without SEC support, right? So, as this high interest environment remains uncertain, capital will definitely not pay for high risks. In the future, in the United States, especially for American capital, it won't be about growth anymore. It'll be about who's cleaner, who's more likable. Before Trump and the SEC, who's more obedient and controllable, right? Especially for crypto firms, it's the same. Okay, say you want to list in the US. The priority might be getting US regulators to notice you and like you. Look, you didn't even pay for a seat at Trump's dinner. To be honest, if you're always shoving the truth in people's faces, it gets annoying. But our language has a natural way of sugarcoating things. Before, poor was just poor, right? Now, calling them the soon-to-be wealthy sounds much better, doesn't it? Unemployment used to be just not having a job. Now it's flexible employment. Doesn't that sound more acceptable? Gambling used to be taboo, but call it a prediction market, and suddenly it's sophisticated. People used to chat about conflict, energy, and diplomacy just as idle gossip, right? Now the reason prediction market is blowing up in crypto is because people realize this gossip isn't just for bragging. It can actually make you real money. Even those big shots on Wall Street in their suits and ties can now use this legal veneer to jump in and play the prediction markets. But what's the essence? It's still just gambling.
Israel launched a strike on Iran's South Pars gas field, triggering an Iranian response against energy facilities in Qatar and elsewhere. The situation quickly spilled over into the Gulf region. This field is the world's largest gas field, and its impact on Qatari exports pushed oil prices to about $110, with US gasoline at around $3.84. Rising shipping risks in the Strait of Hormuz have driven up inflation expectations. Trump warned that if the situation continues to escalate, stronger measures will be taken, as overall uncertainty keeps rising.
So we'll see how we do, but we're doing very well. So we'll see how we do, but we're doing very well. We have a great military, and they're doing a fantastic job. If we have a little high oil prices for a little while, but as soon as this ends, those prices are going to drop.
Polymarket announced it will open a physical situation room in Washington, D.C., combining real-time odds, news, and policy discussion. Meanwhile, the platform continues to expand, with a valuation of about $9 billion. ICE plans to invest $2 billion. The platform runs about 10,000 markets simultaneously. U.S. exchange executives are also calling for clearer regulations. Prediction markets are moving from niche products to a position closer to financial infrastructure.
The popularity of prediction markets has its own human logic. We know that things like vice and gambling are hard to stop because they amplify the greediest side of human nature. Gambling has been a social phenomenon for thousands of years. It's unstoppable. You don't even need to ban it because it's human nature, right? Now, Trump is the ultimate authority in the prediction market. One missile from him can change oil price expectations. One sentence can shift financial trends. So, in my view, prediction markets are the high art, while gambling is for the common folk. But where's the real difference? I have a criterion to discuss with you. If you disagree, feel free to share your thoughts in the comments. If you're betting on, say, whether it'll rain tomorrow, that's natural probability. That's called a prediction market. But if you're betting on which of the two cards in my hand is higher, that's gambling. This standard should be easy to understand, right? If it's human controllable, it's gambling. If it's natural probability, it's a prediction market. But then again, look at all the different assets in Polymarket's prediction market right now. How many of them are actually beyond human control? Let's discuss in the comments. Can OpenSea shake off its old labels and succeed in its on-chain transition? Kraken has paused its IPO and even the CFO was let go. Has the crypto IPO wave truly receded for good? Hey, let me ask you something. Do you still remember OpenSea? We haven't talked about it on the show for at least 6 months because NFTs have been out of the public eye for a long time, right? Lately, everyone's saying OpenSea is finished, but its founder has been publicly saying that they're upgrading and reforming, aiming for a vision of a new world. Recently, there's a Wall Street tabloid, well, not a tabloid, but a media outlet that influences high net worth individuals called Vanity Fair. It reported on OpenSea's founder, Devin Finzer, and referred to his partner, Guo Yuki, as product mommy, meaning the driving force behind her husband's success. And the reason? Well, as his partner, Guo Yuki actually got into Bitcoin 7 years before OpenSea. She started hoarding coins back in 2011. She's also the co-founder and CIO of a digital asset hedge fund in New York. So when this contrast comes out, it sends a message that OpenSea might really be on its last legs. But the founder said, as long as I'm here, the company is here.
In its long-form article, Vanity Fair, besides poking fun at Devin Finzer's wife, also called Finzer a Build-A-Bear. Literally, it means a toy bear you assemble, implying someone who's been packaged and manufactured. It also cited criticisms of the company's early tendency to chase trends and its short-sighted decision-making. It pointed out that after the NFT bubble burst, OpenSea's valuation dropped by about 90% from its peak. Finzer later responded on the X platform, claiming the report was significantly distorted.
You know, whatever life gets thrown at you. And yeah, for me, that's been a huge part of that has been my wife and you know, I think that's a big part of the process for everyone who's either an entrepreneur or builder or founder or what have you.
OpenSea hasn't stopped at the NFT stage. OS2 already supports 19 chains and has launched an incentive system. The goal has shifted to becoming an on-chain gateway for all assets. The SEC previously ended its investigation without enforcement. Data-wise, the platform once reclaimed 71.5% of the Ethereum NFT market share. Monthly active users rose to 467,000, showing a temporary recovery. But on the other hand, the delay in the C token issuance shows the transition path is still being validated.
As hot as those NFT pictures were in 2021, that's how much OpenSea was raking in. In 2022, it was criticized just as harshly, becoming the poster child for the bursting bubble. Everyone's looking back at OpenSea like it's ancient history. But OpenSea has made many reforms this year, like supporting 19 chains and upgrading to OS2. And they're even planning to launch their own platform token, SEA. But will the market accept this past its prime leader as the new generation's on-chain gateway? When you hear OpenSea, do you think of bored apes and all those skyrocketing NFTs? So, whether OpenSea can make a comeback depends not on advanced features, but on public perception. How do you flip that? The market is truly bearish now, but just how bearish is it? Kraken has already announced it's suspending its IPO plans. They're not going public. It wouldn't look good now. Stock prices won't rise without liquidity, right? The hype's gone. Now, Kraken has even replaced its CFO. Basically, there's no point in competing in finance right now. Why bother with no money? In a bear market, you focus inward. So, this is a resilience test for all crypto firms. Can you survive until the money starts flowing back in?
Kraken's parent company, Payward, filed for an IPO last November, raising $800 million at a $20 billion valuation. But Bitcoin's drop cooled the market, stalling the IPO. CFO Stephanie Lemmerman has since departed. The company is now waiting for the right time to relaunch its IPO.
There's always this conversation about day by day what's happening in the crypto markets or equity markets, or a quarter by quarter. If you take the long horizon, which is last year we were at 65,000 or 68,000, and then we went to 100, then 120, back to 100. I just think a price volatility at this scale has a ton of volume.
Last year, crypto IPO funding hit a record $14.6 billion, but 2026 started off cold. BitGo's stock price has dropped 44% from its offering price, dampening market confidence. In contrast, Securitize is moving forward with its IPO, having completed a $225 million funding round. Institutions are prioritizing compliance capabilities and sustainable revenue.
Why did Kraken pause its IPO? Here's the truth. When they finished their funding, their valuation was already $20 billion. That price anchor means they must wait for the right wins and liquidity for a better market window to go public. Otherwise, listing just means a drop. It's the same in crypto. Who's still chasing memes or wealth codes now? Everyone's just lying low, waiting for this long winter to finally pass. The story of Kraken in the crypto world is far from over. We'll keep a close eye on it for you. All right, let's get the news.
Solana's daily transaction fee revenue topped $4.2 million, a 3-month high. Active addresses exceeded 1.1 million as on-chain transactions continue to explode. Capital is increasingly concentrating on high-efficiency public chains. Base's daily active users have surpassed 1.5 million, up over 80% since the start of the year. The market value is about $3.2 billion. It's become one of the fastest growing Layer 2 networks, with its expansion pace clearly accelerating. The Ethereum staking ratio has risen to about 27.8%, with total value locked continuing to increase and circulating supply tightening further. Meanwhile, gas fees remain low and network security has improved, though activity levels are under pressure. The total market cap of stablecoins has rebounded to about $160 billion, with USDT accounting for over 69%. On-chain transfer volume has grown in tandem, and overall liquidity is gradually recovering. In the past week, the AI crypto sector saw over $320 million in funding. Valuations for several projects have risen rapidly, with capital clearly concentrating on the AI narrative, and the market's focus is currently shifting.
Every morning at 8, Mai's AI Morning Report. Have you been keeping up with it? At 8 a.m. Beijing time, an AI looks at humanity from an AI's perspective. This is the biggest style and distinction of this news program. BTV's Evening Report is now my own viewpoint, a human looking at AI, looking at crypto assets, and looking at the risks of digital assets. And what is the AI's perspective? The training we gave Mai is that you are an AI, but a news AI. You need to use an AI's interpretation to tell humans what exactly is happening in the AI world. This is a completely different perspective. So I hope you won't miss this news program every morning at 8 o'clock. You should know that an era never waits for you to be ready before it arrives. It rewards those who act first. It's not AI that's creating the gap. It's the people who don't use AI who are widening the gap between you and them. Remember one thing, the biggest risk for the future is that you're still living in the past. Give us a like if you understand. All right, that's all for today's program. Here are the membership benefits we've compiled. We hope you can understand what the actual advantages of being a member are. Tonight at 8 is our Radar Fluctuation member-exclusive live stream, specifically to answer your questions. Let's strive together and gradually get rich. See you tomorrow.